Hey traders, welcome to another episode of Charts and Coffee. Hope everyone's doing well. All right, so we should have audio and video all set. All right, very cool. Happy Wednesday, everybody. Hope everyone's doing great. If this is your first episode of Charts and Coffee, welcome. Welcome to my office. And let's kick this off. So what we do is we take requests here, whether you're joining me on Facebook, whether you're joining me on YouTube. I just take a look at the chat stream here and answer questions. First come, first serve. Great to have you. We do this for the next 20 minutes. And then you guys can go off to your respective rooms, whether that be the Simpler Futures room, the Simpler Options room, any one of the masteries that you're involved with. And if you're not a member, check it out. All right, let's get to it. So first come, first serve. Let's get these charts. There we go. All right. So first question here. Hey there, Apollo. Hey, you got your question in early. All right. Apollo asks, are the alerts you send out in Sector Secrets, do they do covered calls? Oh, you know what? Apollo, you are going to love what I'm doing actually for this week's Countdown Trader newsletter. Now, Countdown Trader, you can check that out at countdowntrader.com. That's just a free newsletter. It's a very cool way to keep up with what I'm doing in between these episodes. You can check that out at countdowntrader.com. One of the things I'm going to discuss is, yes, I do naked calls. What does that mean? That means if I'm writing a call, I don't necessarily have to own the underlying stock. The thing that I do not recommend ever, right? Never and always don't apply to the markets that often. But one thing I will tell you that I never do is I do not sell premium without a safety net, without that cover, if you will. So naked long calls, naked long puts, yeah, no problem. Because remember, your risk is limited to whatever you paid for the option. And of course, let's say you wanted to do a call vertical, you want to do a vertical spread, I will still leg into those particular positions after first having bought the call, long a call, and then I'll look to sell premium on the other side to offset cost or offset risk, etc. So thanks for the question. All right, good morning, good morning. Great to see everybody. All right, what a time to be alive. Yes, hey there, Alex, how are you? What a great time to be alive, GME and AMC. One of the things that I shared, was it yesterday in Charts and Coffee? It might have been yesterday, and I know I shared it in the chat room, and that was, there's a specific scan. So you could reverse engineer it. Forget GameStop. I mean, GameStop was sitting at $5 last August, right? How do you reverse engineer something more freshly parabolic, something more freshly Reddit, Wall Street bets? AMC would be a really good example of reverse engineering. What is that float minimum and the cost, right? And it's a pretty simple 3-step type scan, and you'll come up with a lot of different names in terms of, how do you reverse engineer what could be the next GME or AMC? Really, really interesting what's happening. It's interesting, and I'm not going to go off on a tangent, but I secretly love it. I love it. You know why? I'm going to be totally honest with you, because people that are empowered, I'm not saying they're necessarily educated. Some of them are, I'm sure, but the people who are empowered to say, you know what? I want to take this trade. I want to figure out how to control risk. I love when the individual investor and trader has said, you know what? I'm not going to be hijacked by the shenanigans of hedgies. And by the way, hedgies have a little broadcasting area too. It's called financial media. I won't single out a channel, but how many times do hedgies go out there and talk their book? Give me a break. I love what's happening to Wall Street right now because of this. I'm not saying it's intelligent to engage it necessarily. Hear me out. But yeah, I love that individual investors are empowered. I do. NVIDIA. Yeah, let's get to it. No more ranting, because I could rant about this for the next 20 minutes. All right. NVIDIA is a sideways market. So take a look at the way in which this is moving in a range. Now, if you're looking to collect income, this is the kind of market you want to take advantage of. Amazon would be another really good example of range-bound markets. So if they're not going into earnings, so you're not necessarily engaged in a position that's going to have to sit through the volatility of an earnings event, I don't mind these kinds of what I call a yellow market, sideways, blue grab candles, range bound. Another more mainstream word for it would be a distribution market. These are great for collecting income, but I won't look for it for a directional trade. So I hope that makes sense. I think there's an underlying market trend that suits lots of different environments. And I think one of the things that's our job to do as traders is determine the environment and what it's best for. Is it best for a directional play, or is it best for a play on a sideways market and taking advantage of collecting income? So that's an income type. Now, CRE. Hey there, Stephen. CRE is an interesting pullback, but it's happening right in front of earnings. Again, remember, the overall, oh, hang on. Shut Alexa down here. All right, there we go. So the idea that I want to engage a market immediately in front of earnings is not one that I typically do. So case in point, why wouldn't I? Let me give you a good example. CRE has been a great market to play before. Now, I'm not in it, but let me show you something somewhat similar so I can give you a game plan. We've been playing Starbucks, right? Where's my drawing tool here? We've been playing Starbucks, and Starbucks earnings came out yesterday. I am not going to make a scratch-off ticket play in terms of what Starbucks is going to do for earnings. I think the cleaner, safer, more risk-managed play is to find a double green market, play the pullbacks, which we did, and then get out in front of earnings, which also we did. So this was a nice trade in terms of playing it to earnings, not through earnings. So CRE, let's go back to your question about CRE there, Stephen. CRE is cool because CRE was just very Starbucks-esque, right? And it's the lead up, even as far as 6 weeks out before earnings, that I'll look to play that run, that rally into earnings, as long as it's the right underlying environment. So great stuff. Thank you. Bearish things are going up today. Hey there, Mike. Let's see, TLT, dollar, bearish ETFs. So let's take a look at TLT, and also we'll take a look at the dollar too. So if I'm looking at TLT, this is a downtrend. I am not a big fan of engaging the bond to the short side, but that seems to be where it's heading. I have not been in bonds for quite a few months now. When bonds was bullish, I loved the lower yield play. Long bonds and long gold worked really, really well. Now I'm steering clear of both gold and both bonds, but you bring up a great question in the dollar. That's the UUP ETF. Now remember, dollar is a basket. Whenever you play the US dollar, you're always playing a basket. If you want a cleaner play against the dollar and something else, to me, I would recommend taking a look at FXA, FXC. That's something we've been trading quite a bit. That's Canadian dollar. FXA is Australian dollar. UUP is about 58% euro in the basket. And then kind of a fairy dusting of pound and Canadian dollar and krona and yen and things like that. So if you want to play a more direct dollar short or long, whatever your play is, I'm very dollar short. I've got long positions. And again, all my cards on the table, these are alerts that I've sent out for long pound, long Canadian dollar, long Aussie, long New Zealand dollar, not yen and not franc. I'm not interested in playing those two currencies against the dollar because remember, in an overall uptrend of the equities markets, those two tend to be your funding currencies. Those two tend to be your carries, kind of unwound. And, in other words, what do I mean by carry? For those of you not familiar with the terminology, it's very cheap to borrow yen. And a very popular carry is buy Aussie, sell yen. Use the yen to fund the purchase of the Aussie, and you're getting that interest rate differential. Well, in general, and generally speaking, in overall uptrends in equity markets, commodity dollars tend to do well. Hence, short dollars, buy those calm dolls. Great question. Thank you. Paul, good morning. Good morning. Can we take a look at Disney? Yes, I have some skin in the game in Disney. It's still in the zone that I am focused on. I'd like to see it wake up. Looking at the morning pre-market, it might be a little touch and go until after the clearing period, 10 a.m. Eastern. But yeah, I have some skin in the game. I'm looking long. There's nothing else I really can do. I can either look to, based on my process, right? I can either acknowledge that the trend has gone a little sideways. It's lost some of its swagger, if you will, but the path of least resistance is still up. So this is a retracement through here, right? I'd like to see it find some support and then continue the trend that it has been going. This is very Charles Dow Theory 101, where we respect the trend that was, right? And again, if you have questions about some of these ideas and things like that, yeah, check out what I do over at Countdown Trader, because I talk about a lot of these ideas. It's a free newsletter. Check it out. I'll walk through things like that question earlier about naked calls. Is that okay to do? What's the downside? Things like that. And then things like following the trend. What indicators do I use to do this? By the way, every single indicator on this TradingView chart is an indicator that I make available for free. So if you want to replicate, the propulsion dots, the wave, the grab candles, these are all different free tools that I make available to members. So, and some of these are available right in the platform. So if you search under indicators for Simpler, you'll find propulsion, wave, Darvis, grab, all these free tools that automate the trend, that automate self-correcting moving averages and support and resistance. So just letting you guys know, these are free tools. All right, next up, hey there, Becky. Do I think these things happening with GME and AMC, will they frame this as retail not being able to protect themselves and take options away? Oh gosh, I don't think they're going to take the options away, but they're going to try to shut down the board. I'm sure, right? I mean, gosh, what's a hedgie without being able to go on CNBC, let's be honest, and talk their book for 30 minutes, right? So I don't see this any different than individual investors doing the same thing. I mean, what's the difference? None. I don't think they can take the options away, but it'll be interesting to see what the reaction will be. I don't know. I just trade it. I just try to scan for what might be the next short squeeze, because that's all that was. It's just a short squeeze in absolutely nuclear mode, right? But it's just still a short squeeze. It's still a high float. When I say high, gang, when I was alluding to a filter, we're talking 30% or more short float. Clearly, if we're talking the sort of Reddit boards, it's going to be a sub $20 or sub $10 stock, right? Traded in the US. So would I be flat today at noon? Well, remember, thank you for the question, Andres. Let's take a look at our economic calendar, because today, it's Wednesday. Normally, I would be pretty bullish in front of this. Remember, play your calendar. This was last week's Countdown Trader update. How do I play the calendar? How do we play in front of FOMC? How do we play in front of Powell events? Generally, I'm going to be pretty bullish up to the event, and then we know lots of crazy things can happen. But today is punctuated by a lot of huge earnings. Apple is one of them. Is the market going to want to be short in front of those earnings? That's nobody knows, gang. Let's accept the one thing that we all have to know about trading, which is we play probabilities. We don't play certainties. That's why they call it fishing and not catching, right? Same idea. So I just want to play the probabilities that typically the market's not going to want to be short in front of Powell. They make adjustments according to how accommodative the press conference tone seems to be. But then, it's not every Wednesday FOMC meeting that it's bookended by Apple earnings. I don't want to be short into an event like that. That's just me. If you're looking at sort of what the punchline is today, right? It's not just Apple. It's a number of heavily weighted stocks within our broader indices. Okay, so pins was the next question. Hey there, Shai. All right, taking a look at pins. I like pins to the long side, but let me explain a few details about pins. So first of all, again, all my cards on the table. Transparency is the name of the game. We played pins once already. This was actually an alert in Sector Secrets, okay? By the way, so is Diz. It's still an open trade. We'll see how it goes. I will tell you, the end of the month has been tough. I don't want to sit here saying, oh, great, look at my winning trade. Let's be straight up. There have been a lot of relative outperformers late to mid-January that have been tough, right? Nike has been good to me for months. Oracle, same. Honeywell, same. And those have all started to roll over. So it's been challenging. I'm looking forward to February. I'm looking forward to getting past what is seasonally a difficult 2 weeks, which is the middle of January to the end. We tend to see this sort of window undressing from the previous month, from the previous year. So pins, all right. We took pins the first time that it pulled back to the 34 EMA wave. It did it again, and it's doing it now. Now, I want you to notice something. The last time that it pulled back into the wave, look how deeply it did it. Look at the characteristics of the last retracement and kind of project that to what we could expect for the next. I'm not going to trade this one aggressively. In fact, in many ways, I'd almost like to trade it right back down in this zone if I'm going to do it at all. But I do not have any skin in the game in pins. I am watching it, but I don't like it as much as the first pullback that we had. This one let me know there's a lot of blue grab candles that I'm going to have to contend with. And so I want to remember that if I'm going to engage pins at all, it's probably going to be from the 34 EMA on the close down to the previous lows that we saw, almost as if it were a trend follow that I'm giving a lot more latitude to, or an oversold buy with the overall directional bias being up. Or, hey, let's hope that Elon Musk loves Pinterest as much as he loves Etsy, because you know what? I wouldn't mind a tweet from Elon in pins. I'm only slightly kidding. We are in strange, and slightly odd, but wonderful times. All right. So are we finally having a correction? I would say hardly. Look, I think once we go parabolic in any market, the market's tolerance for any kind of pullback, for any kind of weakness is very, very low. Panic ensues. I mean, look at that big candle. I mean, we're 30 seconds away from a markets in turmoil special, aren't we? But remember this, we are barely grazing the 21 exponential moving average. That to me is the very top of simply a retracement, not a reversal and not a correction in that larger market pullback type context. So 21 exponential to me is about the shallowest level that begins a retracement. It extends down to the 34 EMA on the high, the close, the low. Look at the size we have down here just below that. That would be oversold. But no, I don't think this is a large move in context at all. To me, this is a pitch. The last time, let me give you an example, just to give you, again, I think it's really important to give you guys examples of the idea. So the 14th of December. So back in December, we looked at a pullback scenario in the Dow via the DIA. So I wasn't using the YM, although you could use the micros too, but we were looking for a pullback buy. Now they never are fun. Right? This stuff never comes on good news. But if the overall trend, and this is really important, if the overall gist of the trend, the overall direction is up, right? Is up. So keep that larger framing in mind and then think about what this means and what this means and potentially what this means to the structure of the trend. Is the trend broken or is it rather a buying opportunity? Now, there is always going to be that context of the one last trend trade. One of these will finally fail. We don't know which it's going to be, but I'm not going to be afraid to buy the pullbacks within the context of a double green trend for fear of the one time that I get stopped out and miss out on all of that. Right? And remember, our risk, the way that I set these up is basically that, right? So compare this and this to this, right? I hope that makes sense. I'm kind of going all John Madden on these charts here, but you guys I hope you get the idea. So kind of going back to, is this, are we finally getting a correction? Sorry, I didn't post the question. Thank you, Line Watcher. Are we finally getting a correction? I will view this as a retracement. I will view this as a potential swing trade. That's the way I'll view this. All right. Okay. So, gang, I hope that is helpful. We do this every morning from 9 to 9:20. I'm going to take another question or two. And then, gang, head on off to your day jobs. I'll be heading off into the futures room and the sector secrets master room. I'll be checking out what's going on in the options room as well. If you're not a member of Simpler Trading, check out what we have to offer. We have a lot of different asset classes we cover, lots of different traders doing their thing. It's a fantastic community, as you can tell simply from our Charts and Coffee show. TSM, I'm going to hold off. I like it a lot. Keep an eye on the SMH. I'm going to leave you guys with that. I'll see you tomorrow at 9 a.m. I'll see you in the chat rooms a little bit later on, and be good to each other, gang. And until then, talk with you soon.